Hey guys, Sierra Bailey here with Accel Commercial Real Estate. The video you're watching ties into our event in June, Accelerate. If you want to learn more about what you see today, scan the QR code on your screen or click the link in the description to get your tickets now before early bird pricing runs out. Enjoy the video.
So Cindy is a wealth manager, but she has a specialty in that she really knows insurance. And insurance, life insurance in particular, is really critical. And it might not be the first thing that comes to mind when you're thinking about investing. So we want to talk about tonight. First, I'm going to let her tell you about herself and what she does. And she is a pretty humble person, so I'm going to coax her to say, so she already knows that I want her to brag on herself a little bit. And so, but that's not her normal thing. And so hopefully you're going to see how she's impressive, really, really impressive in what she does. And so, Cindy, why don't you tell us a little bit about yourself and what you do? And then I'll kind of talk a little bit about your heart, because that's what she does is one thing, but how she does it is another thing. And I have personal experience with that.
Thank you, Jen. I appreciate that. And thank you. It's nice to meet all of you. So I was a banker for many years. So I grew up on a farm. We had 287 acres. So truly understood that land is priceless. They only make so much of it, and real estate is important. Grandfather was a retired school teacher banker. And from that, I grew up paying attention to the dollar. Started banking I was in banking for many years. I was a lender, I dealt branch manager, but yet very multifaceted. And we won't quite tell my age, but I got licensed in the early 90s to do investments in life insurance. I'd lost my father to a heart attack at 39. So putting all of the pieces together to help my clients over the years to be successful led me to become a financial advisor and use my specialties in 2008 because the brokers at the bank were not returning calls. I'd spent many, many years helping clients in Williamson County. I've been in Tennessee all my life, actually acquire property. So not the multifamily, but I've had clients that would literally come in, they would buy a commercial building here, they would buy a residential home here, and they were accumulating their wealth over time. And even for the properties that my husband and I own, we have two homes, if you will, but each home has a separate tract of land beside it, so that we have that opportunity if we decide to follow your passion and to help other people. So in joining Equitable Advisors, now Equitable was Accel, I came to them in 2008, very blessed. And I've used my knowledge of working direct with individuals and business owners, again, that business owner specialty, because I was the lender that actually was over in Grassland, but I actually took care of all the business owners, a lot of business owners in Williamson County. And from there, been very blessed, do a lot of advanced planning. I've been $1 Million Roundtable, so that's kind of the higher echelon, if you will, of advisors, especially to be a lady, to make it to that degree. That's kind of unheard of. You have understanding of $1 Million Roundtable and insurance license, it looks like. But and I also feel like life insurance is really more of the foundation for many reasons, and I'll get into that when Jan is ready. But it can, as a lender, I have actually used life insurance to get loans approved for individuals when the underwriter said no. So I'm very creative because coming from that farming mentality, if you see an obstacle that you need to overcome or get it done, if it's right, you're going to find a way to make it. So it's putting in those hours.
So tell them what your title is.
Oh,
with your company,
with the Bailey Group.
Mm-hmm.
So also part of the Bailey Group. So what we actually do, regional vice president. So what we do there, if borrowers come and they need life insurance, we actually specialize in getting that done typically in 5 to 7 business days for the collateral assignment. So banks really look at life insurance is being added collateral. So we can't go put you in a safe. We can't put you on a shelf. You bring value to what you do. You being a commercial banker, you totally understand. And I love some of the guys over at US Bank. We've got some good friends in common, I'm sure. But with that, you bring value, your knowledge to go find that property and know that it works on paper, and you turn it to a profit or hold it till the time is right. You see that rough piece of property that you can go in and put some spit and elbow grease and turn it into a shining diamond. Someone else may not do that, but the bank can't put you on the safe, on a shelf in the safe. So what they actually do is you buy life insurance. The bank now becomes your collateral assignee. And I'll talk about different facets of life insurance in a moment, but typically that's done with term. And if you passed away, that loan is actually, or that portion of the loan is paid. And so that's how banks look at you as being more bankable. Is it okay if I go ahead and break into a couple of different pieces of life insurance real quick?
Yeah.
So with what you do, renters don't build equity, right? So term life insurance is renting. If you buy it, if you die, it pays. If not, you've just rented that security for coverage is what you've actually done. So there's no equity, but you being the owner build equity. So term life insurance fits the bill, the roof over their head. It satisfies the bank because you have a piece of life insurance there to help them get through, knowing that if you passed away, their collateral, you, is actually secure and paid. They're not at risk. Banks really don't want to own the real estate. They're in the business to lend you money. They're in the business to keep you going so that they can actually get revenue payments, make interest, turn around and help someone else start another business, make more deposits. And so it's kind of that beautiful exchange of dollar. Well, if you were to have bought a permanent life insurance policy, so again, that permanent life insurance policy is much like you owning a piece of real estate. You're making payments. The payments are a little bit more expensive, but you have ownership in that policy and you build equity and cash value. Banks can actually put a lien on the cash value in the life insurance policy if need be. Okay. So that's another avenue that, even tying into potential tax laws or growing tax deferred, that's another avenue for you to put dollars back, either to take out at some point or for you to borrow from yourself or to let the bank put a collateral assignment on the cash value in the life insurance policy. So they've got added security that you've stored dollars back over time. So, and another piece of that, whether the bank, we'll talk about if you were to borrow from yourself, there are carriers who will actually lend you, you may do a loan, if you will, on cash value within your life insurance policy. Typically, you will borrow from yourself at 3%, depending on the policy, depending on when it was issued, depending on the carrier. There are some carriers that will pay you 2% back. So they're billing, you're paying 3% back into your policy. They're crediting you 2 for a net 1%. So talk about being in the driver's seat at some point in time. That gives you another, bankers like to,
Like an avenue.
it's another avenue, but bankers, you have options. Those avenues, bankers will look at that going, this individual has a will or a trust set up, or they have their life insurance. You have looked at your financial situation and you have really paid more attention to it. So on paper, you look better. Not that you're any better at what you do than the next person, but you've taken that extra step to actually look at your finances to make sure that your estate is protected, to make sure that your business is protected, to make sure that your finances are protected, or your family, because the bank really doesn't want to put your family out if they've repossessed a piece of property that's generating revenue. That's the last thing they want to do.
So I want to ask you about the timing of all of this.
Yes, ma'am.
So when y'all are, so let's say you bought the property, or it's under contract. We found that quad or that 100-unit apartment complex, right? So it's under contract. From the day that it goes under contract, talk about the timeline for you and the bank because there's a lot of things that have to happen concurrently, right? You got to be working on the earnest money at the same time. The title company has to be working on the title, and you've got to be working on the due diligence all at the same time. So on those continuum of those concurrent things that are happening all at the same time, when do they need to talk to you about insurance, and how is that? What does that usually look like? Kind of walk us through step by step. Let's assume that they are going to use you, and that they have either a term or a whole life policy or whatever policy they've got. But now they've got to insure that property based on that. So walk us through from, all right, it's under contract.
Okay.
Now what?
So great question. So let's assume, we'll start the easy answer. Let's assume that you have a life insurance policy. If it's term, depending on what you have, you may have bought it for a different purpose. So again, we're going to go the soft answer. Not all people can get a collateral assignment filed in 30 days. So if you find a piece of property, you know you're looking at it, let's go ahead and start a conversation. The minute it's under contract, let's get off to the races. Let's go ahead. Let's start the application for two reasons. We can control a lot of things. We can't control your doctor getting medical records back. We can't control the fact that you may not have gone back and had that colonoscopy or that follow-up because you had a skin cancer removed, and now I'm having to send you back to have maybe a CAT scan or a PET scan or something like that. So the closer you get to putting that under contract, the easier it is for us to get started on that, because from there, you may not have earmarked your lender, but at least I've gathered some data. I'm understanding what your health concerns are. And so I can coach you through, go get your medical records. These are things I need so that the moment
You have like a checklist?
I do have a checklist, and I'm going to hold their hand the whole time and walk you through even a good exam, because my goal is I want you paying less in life insurance, because I want you, our small business owners, to keep this country going, because you are the backbone of our country. So a dollar saved is a dollar you can spend somewhere else. And it's all about proper positioning. So when you look at it from that perspective, we're going to work through the checklist. You earmark a lender. We go ahead, we do the blood work at that point. If we need blood work, we get you an approval. What if you change lenders? Okay, I turn right around if we haven't issued the policy and we change the collateral assignee. So very simple process. We can change the collateral assignee because maybe Bank A over here said we were going to be able to do it,
or the interest rate's like crazy, or whatever reason it's going to have you.
Or today, now we're not doing multifamily because we filled that bucket. We've lent what we could lend based off the assets.
That's never happened ever to any of us in this room. No.
So, but
I'm
again,
being facetious.
It has happened, unfortunately.
Yeah.
So, and we have actually been able to go in and change collateral assignee within a day or so.
And I do want to say, the whole reason for me asking this question is because we've gotten all the way to nearly the finish line, and the bank says, okay, where's your insurance? And what happens if you find out that you're going to have extra stuff that you're going to be required, but your closing date is here and you've already had 2 extensions? And now the one last little missing link is that insurance assignment, because you had to change banks midstream, whatever, and you've got a newbie insurance agent who doesn't know what they're doing, and they haven't prepared you for being able to actually keep this on the right track.
Yes.
So our goal through this learning series is to give you all the pieces so that you can know what the landmines are and how to avoid them. And this is one that people don't really think about as being a major landmine, and it can kill a deal.
In a heartbeat.
And you could lose your earnest money because insurance is not usually included in the due diligence. So if your money has gone hard and you can qualify for the loan, but you can't get the insurance in time, and they don't give you an extension, then what happens to your deal? And what happens to your earnest money, right? So you wouldn't think that this could be a potentially really critical aspect of your your whole process, but it really can be.
Mhm.
So we wanted to highlight that by having her come and talk.
Thank you.
So now rephrasing what you've said,
Mhm.
obviously you probably want to already start working with someone even before you've identified a piece of
Mhm.
property, right? So that you've got somebody, whether it's her or someone else, something you trust that knows what they're doing,
Yes.
right? And that has worked with lots of bankers,
Mhm.
so they understand that process. All right, now you're under contract, you got that flurry of activity at the beginning, and you already know now, because you're attending this class or you're seeing us online, that there might be some health things that might be a little bit more in your day-to-day life. It might not be as big of a deal, but now all of a sudden you're wanting to buy $1.5 million property, and now it's a big deal to the bank that you have that extra 80 pounds or whatever now. And I say that lovingly, whatever insert potential health issue here, where the bar for your insurance carrier now has just risen. And so you might want to have that conversation now if you're a savvy investor, and our goal is to have you all be that, right? Is to have that conversation now.
Thanks for watching this video. If you like what you see, be sure to follow our Generational Wealth Learning series. On select Thursdays, we offer cutting-edge industry information that would normally cost thousands of dollars. And the best part, our education is absolutely free. If you register through our events page, you can join us live, either in person or over Zoom. In the meantime, like this video, comment down below, and subscribe to our channel so you never miss a beat.